Gerry O'Shea, Head of Global Insights at Hashdex, here with Samir Kerbage, our Chief Investment Officer. So Samir, this year there's one of the biggest milestones, I think, in the history of crypto asset investing with the approval of the spot Bitcoin ETFs just a few weeks ago. And what does this actually mean from your perspective for the future of ETF investors and ETF investors having access to this space?
Yeah, so I think this approval is a great milestone for Bitcoin. I think for two reasons. First is that it creates a major on-ramp for new Bitcoin investors. So before the ETF was approved, it was very hard for 80% of the wealth management market in the US to have exposure to Bitcoin. And an ETF offers an easy access for that type of investor. That doesn't mean that this money will come in the short term, but it means that now they can access it. And now the financial professionals, they have a new option to allocate an alternative asset class in their portfolio. So they need to consider a Bitcoin as an investable asset now that there is there are ETFs trading in the market. So I think it's a huge milestone in terms of adoption for Bitcoin. And we're going to see, like in history, this moment, just like we saw during the 2000s with the gold ETFs, that this will be a catalyzer for growth in terms of demand for new investors. So I think it's in our broad investment thesis for Bitcoin, this is a major event that will have very strong long-term consequences. Maybe in the short term, people will not see it, but it's very consequential for the long-term investment thesis.
And our Hashdex Bitcoin ETF is one of the 11 trading under the ticker DeFi. Can you talk a bit about the differentiators for our product compared to others in the market?
Yeah, so I think the big difference of this Bitcoin ETF that we're offering is on the inside, on the how we implement the strategy. So the fund is composed of spot Bitcoin mostly. So at least 95% of the fund must be in spot Bitcoin, and up to 5% can be allocated to Bitcoin futures. And the intention, the objective, and the goal of having this up to 5% allocation to futures is to hedge the costs and the cash flows related to creations and redemptions. So as some might know, like the SEC allowed the funds to go with a cash creation model instead of in-kind. So in order to create or redeem shares of the ETF, an authorized participants needs to send cash. And then the fund needs to buy Bitcoin and then pass along the cost to the authorized participants. With this model that we're proposing, we can hedge that creation and redemption cost and provide a more efficient trading for the ETF. So in the long term, for the investors, what we expect to see is a better tracking of the underlying index of Bitcoin prices using a methodology like this. So it's a very differentiated product. It's the only one that has this approach of leveraging the futures market. It's something that is done in other asset classes for equities ETFs. You look at the S&P 500 ETFs, there are some, most of the S&P 500 ETFs also allow a small allocation to futures to hedge the cash liabilities in the portfolio. So that's exactly what we're doing here. So it's a newest approach, and the end result that we expect to see over a longer period of time is that the tracking difference of this product will be very efficient. It will track Bitcoin prices very closely.
Let's shift to talk a bit about the investment case for Bitcoin. I know you mentioned earlier the comparison to gold ETFs in particular, and a lot of people are talking about a digital gold, Bitcoin being a digital gold store of value. Can you share some of your views around the current investment case for Bitcoin, and if specifically the ETFs, the announcement of the ETFs has changed that investment case for you?
Right. So the investment case that we have for Bitcoin, and we had this for more than 5 years now, is that Bitcoin is an emerging digital store of wealth. Okay, so it's the first time that our society has a way to store value, to transfer value across time using a digital asset. So it's something that is very novel, it's new, and especially like for the older generation to assimilate that, to understand like how that's possible. You can touch Bitcoin, like how is that possible? So that's why we say it's emerging, because the consensus right now in the society is that Bitcoin is not a good store of value. So if you ask the large users of reserve currency or store of value, like central banks and other like institutional investors if Bitcoin is a good store of value. They say no, because it's highly volatile. And you can, like, how can transfer value is something that is very, very, very volatile, and this is digital, there's very risky, and, you know, governments don't accept it. So there's a lot of, like, the consensus right now is that Bitcoin is not a good store of value. And the opportunity we see is that in the coming decade, we're going to see a generational shift in our society. And this technology is still growing exponentially. So this will happen, like, over this generation. We're going to see Bitcoin becoming, like, from a non-consensus store of value to something that is really on our day-to-day and that everyone can access as a digital gold. So this is the big opportunity. It's going from non-consensus to consensus, from emerging to mature or consolidated. And we think this is happening over the next decade. And that's a big opportunity in terms of investment, because when Bitcoin consolidates itself as a good store of value, when central banks are having, like, a small portion of their portfolio allocating to Bitcoin because Bitcoin is as good as gold or better, the investment opportunity will be completely different. The volatility of Bitcoin will go down significantly, so we will not see too much of an upside like we see today. So currently, Bitcoin is not a good store of value, but, like, that's the big opportunity. The big risk as well is that, like, this might take a longer time to materialize. So that's what investors need to keep looking. Adoption, how, like, adoption is growing, how, like, regulated or integrated it is with the society, risks of governments trying to crack it down because it will threat, like, especially, like, government issued bonds as a way to store value. So those are the things that investors need to keep track on as the investment thesis unfold. And having a spot Bitcoin ETF in the US is a significant milestone for that investment thesis, because it will allow more people to use Bitcoin to diversify their exposure and to use Bitcoin just like they use gold ETFs, as, you know, a small portion of their portfolio as a hedge, as a store of value. So a Bitcoin ETF accelerates that thesis a lot. So that's why we think it's like this milestone is very consequential for our thesis. But it's, again, just the beginning. The fact that the Bitcoin ETF is there doesn't mean that, like, that investors will come in. And that's where, like, we need to talk with the investors and educate investors about the thesis, show the opportunity, show the potential it has to diversify their portfolio as an alternative asset class. And this will unfold over the coming years.
If I'm a financial advisor and I've decided that I want to invest in Bitcoin, I understand its investment case, its investment thesis, how do I go about evaluating the 11 different spot Bitcoin ETFs are out there? And in particular, how does Hashdex fit in among that group?
I can break this down in three factors. The first one is crypto is a new asset class, and Bitcoin specifically. It's a new thing. People need to understand this, understand the risks, understand when prices go up, but also when prices go down, when it's happening. And having a specialized asset manager that's completely focused to crypto and focused to crypto for more than 5 years is something that is going to be very relevant for investment advisors to count on our experience in this asset class to help them navigate and help them understand the impact on their portfolio on the good and also on the bad times, right? To navigate this asset class. So it's very important we believe that financial advisors would benefit from having a specialized crypto asset manager partnering up to help them understand the investment thesis, the risks and the opportunities, and the moments to rebalance their portfolio and what to do. So that's the first one. The second one is the experience actually running crypto and Bitcoin ETFs. So Hashdex has been around for more than 6 years now. We manage Bitcoin and crypto ETFs in multiple regions. And this experience gave us a lot of insights on how to do this efficiently. And most importantly, how to mitigate the risks. There's a lot of risks when we're talking about a novel asset class like Bitcoin. So we are proud of like optimizing our whole structure to mitigate all those risks, to give access to investors to the market risk, which is like what matters, what like an investor is looking for is to exposure to price appreciation, but we try to mitigate all the risks around custody or around the operational risks and flowing around the assets transferring in and out Bitcoin. So this is the expertise of the platform that we've built over the last 6 years. And this is very important for this product. And third one is performance, right? So those are the three factors that we believe that financial advisors need to consider. First one, find a partner that help you navigate this asset class. Second one, what is the infrastructure of this partner? Does he have a platform and experience running actual crypto ETFs? Does he understand the risk and how to avoid the traps around crypto? And the third one is look how those products are performing. Normally fees is an important factor when it comes to performance, but in the end, especially in the new product like a Bitcoin ETF, there's a lot of other factors that might impact performance. So in the end, investors should be keeping track of how the products are performing.